Welcome to this episode number 110 of your next trade called today Bitcoin Breakout. So first and foremost, let's be assured, we are not turning into some social influencer and telling you that now we should be moving to Dubai and you should be doing crypto. So this is almost the second time in a row that we are talking about Bitcoin, but this is just because we are looking across asset classes. We are very factual, and we flagged last weekend that there were very good odds that Bitcoin will go higher and be breaking at the 111,000, 112,000 level. And guess what? This week, this is exactly what happened. As always, first you do have the move, but we're going to see in the next few days more and more headlines about Bitcoin and the reserve crypto that the US administration would like to build. So again, this is not the trend that we want to do. This is not about going into Bitcoin, but this is to flag that really the market regime has been pretty much the same since the lows of April, where markets go into risk on. We have Bitcoin making new highs, cryptos making new highs. We have many new names, the retail names that have been making new highs. What has been interesting as well is something that we flagged, I think it was 3 weeks ago. This is the dispersion trade. So the dispersion, what is it? Is the reality is the same that we went into April 2025, same as March 2020, where some investors will be selling index volatility and will be buying in the meantime volatility on single names. And that translates over this week and the last few weeks into the market. We are talking stocks, we are talking Nasdaq, we are talking the S&P being more or less flattish. And in the meantime, you do have big winners and big losers. And this is the dispersion trade. And that tells you, as we're going to see later, that a lot of what is happening is obviously based on flows, based from retail, but more importantly, based on flows that are coming from options. So let's start with what happened for the week, where we had overall the S&P flattish for the week. So not much of a change from the week before. What is interesting is Brazil was under pressure because Trump decided midweek to impose a 50% tariffs on Brazil. That has nothing to do with the deficit. This is mostly a political decision, but that tells you about the uncertainty looking at how to trade depending on where the news is going to be coming from the US. Dollar, a bit of a bounce of the US dollar after huge weakness, more than 10% weakness over the last 6 months. This is something that we said that there was a chance that the US dollar could be recovering a bit. So now we are at 117 versus the euro, for example. But really the two to flags actually. This is the first to flag. This is Bitcoin up 7% on the week, and the second one is copper. So as we said last week, there was a good chance that Bitcoin will be breaking higher. This is what happened. So we've been pretty lucky. And the copper, this is again similar to Brazil, the other way around, where Trump decided to put a 50% tariff. We are talking 50 on copper. And that explains the huge move higher that we're going to be talking as well when we look at technical analysis. What about the week-to-date industry performance? And here, this is really an interesting picture. This is very similar, where we have the S&P that is roughly flattish, and you see between the losers and the winners, huge dispersion. So this is, again, the dispersion trade. This is when you buy single names volatility and you sell index volatility. And that translates into those big moves. And I want to flag a very important sector as well. This is the software on the left-hand side. And this is, to me, one of the very first signals for this sector that artificial intelligence, AI, will be really disrupting some names. So I strongly advise you to be looking at IGV and some others ETFs and finding the names, but I'm pretty sure that you're going to have in the next 2 to 3 years, due to those new competition, those new entrants with AI, some names that are going to be done between 60 and 80%. So this is where you should be doing the research. This is the same for cybersecurity. Other end of the spectrum, we do have some cyclicals. One that is interesting is airlines. So that would be for jets, where we get the DAL numbers. I think it was on Thursday, and we had all the names being roughly up 10%. So that translates as well into finding names that could be into the discretionary space, because we saw recently some dual and some conflictual actually reading around discretionary, but clearly jets has been a good space. So looking at the sector's performance, as you can see, you have most, let's say 7 to 8 sectors that are flattish and some that are moving big. So like telco, financials and consumer staples, and energy doing pretty well. So if you look at the financials, actually they have been giving back a bit of their performances after having like very strong run at the end of June due to deregulation and to the stress test, the bank stress test in the US. We have the earnings season starting on Wednesday with the big banks. So now I want to move into rates, and that's what that one as well is interesting, because the 10 years is still at 4.4%. So yields are not really coming down despite the Trump administration trying as much as possible to put the yields lower. So as we said before, we should be looking at fiscal dominance. We should be looking at when there is emission for bonds. And as well, this is a bit of a fear from the market. Even if it's low odds, we are talking 15, 20, 25%. That either Powell, the Fed chairman, could be resigning, or actually very quickly that is just going to be a Muppet and someone is going to be really leading and being the shadow chairman of the FOMC. And by definition, when you do those kind of things, that is pretty much when you are emerging markets. Similar to Turkey, for example, and that means that translates into a much higher premium from investors towards your bond. So this is still a space to be looking at. What about the Fed funds expectations? Where are we standing? So if you look at the next meeting, it's almost a done deal that there's not going to be any cut. We should be looking at the CPI this week, as we're going to see later. What is the next first cut? It might be September. Now the odds are around 70% that it might be September, but it feels more and more like, the market is pricing less cut from the Fed. But as you can see, the blue line versus the red line, so the blue being the last and the red being from a month ago, this is pretty much the same. So a lot of noise around, when, how, if the Fed is going to be doing something, but we are the same level that we were a month ago. Now looking into volatility, we are still at 16% roughly on the S&P. So that tells you that, there's a good chance that the market will be moving by 1% top. VIX 9 days is at 13%. So implied volatility is still pretty 4 to 5 points higher or more than the implied volatility, the realized volatility, but realized volatility is down the toilet. So let's look at technical analysis as always, starting with actually what do we have. Now let's start with jets. So jets, this is the airline sector, and as you can see, we had on Thursday this breakout due to, as I said, DAL earnings that were pretty good. As you can see as well, look at the move, not only in terms of dollar terms, but as well the participation through the volume, very strong volume. So discretionary space has been doing well. Looking at ES, so we go back from the top, looking at the S&P 500. What is it telling us? Still a bit of dodgy technical analysis, but we have been trading sideways for the last 4 to 5 days. Still, we are at the all-time high, so don't make any mistake. For the Nasdaq, this is pretty much the same, where we have been trading sideways 4 to 5 4 to 5 days, but really all-time high. Something that we flagged, this is the Russell. So the Russell, we said end of June, beginning of July, that there was a good chance that it will be outperforming the S&P and the Nasdaq, and this is exactly what it did. So that is the broadening of the overall market. I want to flag the Bitcoin. So Bitcoin, as I said, we started with that call. I don't want to be into being a crypto influencer, but as I said, there was a good chance that we will be breaking higher, and we make a 7 to 8% move very quickly. Another one that I wanted to flag, this is copper. So as I said, Trump decided to put 50% tariffs on copper, and this is the move. This is another breakout. So if you go through most of your graphs, charts, this is going to be always the same. You're going to have tons and tons of breakout, and as you see, this is the highs here that we had in 2024, start of this year, let's say March, April, and then bang, we go very quickly into the HG1, much higher. Two other charts that I want to flag because I'm a bit boring, but I like to go over the same signals, the same market regimes. This is JP Morgan. So we did the breakout. We have been actually giving back a bit of performance. Now on Wednesday, as I said, this is the earnings season starting with JP Morgan. And finally, NVDA making new all-time high. We flagged that one. We flagged 165. We're going to be talking about it in 2 minutes. Call that we had with actually decent volume over the last 3 days. So let's discuss about what happened for the week. We said it will be a quiet week because not much of earnings, actually no earnings almost, and macro was really quiet. And that translates again into the S&P being flattish for the week, not much really happening. So we had a bit of bond supply. Those auctions did pretty okay. We flagged the crypto reserve fund deadline that's going to be happening soon. We flagged the tariffs deadline, and flagged. It's not like we are better than other people. It's just that it's pretty clear that everyone is waiting of those new deadlines. We moved the deadline from the 9th of July into the 1st of August. So 3 weeks later, we're going to have tons of headlines in the meantime, in the next 2 to 3 weeks. So first thing first, this is the NVDA. So NVDA reached midweek the 4 trillion market cap. That tells you again that the market is on pure risk on. But we flagged in the community around Thursday that it was mostly about the 165 call. And here, this is the chart over the last 5 days about the 165 calls and the price. And you see the volume. So we started on Wednesday, big volume. Same on Wednesday at the open. So you do have like a flurry of retail traders in the first 30 minutes to hour of the trading that will be buying these calls like relentlessly, very actively, but that translated into 165 for NVIDIA being a huge magnet, and this is where we closed. So when we went a bit into the 167.50 and above, clearly at the end of the session on Friday, we came back. As I said as well, the dispersion trade very strong. And finally, the market regime through explaining. So this is a good chart from Nomura explaining the levered ETF asset under management, and you can see the growth since 2020, mostly due to the change in regulation, but that means the market is very much leveraged. You have tons of names that are turning 2 or 3 times ETFs. We are talking NVIDIA, Tesla, and all of this. So that means we went from a world where in the US the leverage due to stocks were pretty limited, and now most retail traders will be doing options only, and guess what they're going to be doing is they're going to be losing tons of money, and as well they're going to be using leverage ETF. So look, you can do whatever you want. It's the same if you want to trust those people that are telling you to do it. Probably you should not do it actually, but you are still doing it because you think this is the way to be making money. So levered ETF, we are talking all those options. Tell you about the market regime. Crypto is telling you the same. putting a lot of money into very few names where the market breadth of the overall market is not that great. This is what the market is. This is the regime. As long as you don't have a change, play with the rules. So let's start now with something where we're gonna have a more busy weeks, starting with the macro, where we're gonna have the CPI on Tuesday, PPI on Wednesday, retail sales on Thursday, housing starts on Friday, and University of Michigan. So a bit of everything: inflation, retail sales, and as well, how the consumer confidence is in the US. As you can see, most recently for the CPI in the US, except the April, what obviously where it was all about tariffs, the market has been moving between minus 0.5% and 1%. So almost like the market didn't care that much most recently about the CPI and the PPI, and that translates again for this week into weekly straddle for the S&P, for the SPY, to be plus minus 1.3%. So implied volatility for the week very much compressed, where in the meantime we do have like tons of macro, we do have like tariffs, and we do have as well tons of earnings. So it's almost like the market is saying, oh, everything is going to be fine. So pricing, no tell whatsoever. Obviously, as a French dual citizen, should I say, this is Bastille Day on Monday. For all the French viewers, have a good Bastille Day. 14 juillet, this is for us. You do have like some Fed speakers as well for the week. So this is as always the Fed speakers, but really this is the start of the earnings season. As most of the time, the biggest one to start is JP Morgan. So this is the JP Morgan that you have here. You got ASML for the semiconductor. You do have like most banks that will be coming from Wednesday onwards, but TSM already gave some of their numbers. Netflix, you get 3M. So again, going forward for the next 3 weeks is going to be very busy for the earnings season. As we said last weekend, if you didn't watch it, maybe look at the last part of last weekend. We explained that the expectations for this earnings season for Q2 earnings growth have been lower to 4%. Over the last 3 months. So the expectations are pretty low versus, normally a 7% earnings growth. So we come into this earnings season with pretty much low expectation. But as I said, volatility is very compressed. We have the same regimes. We got the risk on, we got leverage assets. So pretty much like a hoo-ha party, where we have as well good seasonality for July, but for August, not that great. So I started to put a position which is looking at put spread for the S&P with 7 to 10% downside for the next couple of months. It's offering a 9-to-1 risk reward, so very good risk reward. This is a protection trade. I've been doing that over time, over years, when I think volatility is very much compressed and the market is pricing a hoo-ha scenario. So this is it for me for this week. Any questions about how we do it? How is the process? If you want to join the community, if you want to do mentoring, so we're going to have tons of new mentors starting in September after the summer. So if you want to join, you should hurry because the seats are very limited. If you want to join the trading community with Discord, there is one free channel and there are 30 channels beyond the paywall. It costs $75 a month. We get good traders there offering some good insight and some good trade ideas. So this is it for me for this week. Have a good trading week. Bye-bye.